Hey everyone, this is the Halifax Real Estate Podcast. My name is Jason Paul, and I'm a licensed realtor at Keller Williams Select Realty in Halifax, Nova Scotia. I'm here to help you gain a better understanding of real estate in Halifax and introduce you to a wide variety of people that work in or with our industry as well. Aaron MacDonald has been a senior insurance agent at AllState Insurance since 2015. With 5 years of experience helping his clients choose the right insurance package that suits their needs, there's no one better than Aaron to talk about the different home insurance packages available. Please welcome Aaron MacDonald. Hey Aaron, how are you?
I'm great, Jason. How are you doing today?
I'm good, man. Thanks for coming on the show.
Thanks for having me.
I guess I'll get right into it. Why insurance?
That's a great question. It was never really, I didn't grow up as a little boy saying I want to work in insurance. I don't think many people grow up to aspire to be insurance agents.
I thought everyone did.
It more or less kind of was happened by chance. One of those type of situations. I was in the wireless business for a long time, and had a friend that was insurance. She said, "Hey, your wife is a real estate agent. Why don't you try insurance? It would probably partner well together with what she's doing." I checked it out, and 6 years later, here I am.
Oh, there you go. How have you liked it since you got into it?
It's a different business. Like, it can be very monotonous at times. I think that I really enjoy the educational piece, much like yourself with real estate, I think, which is where this podcast was born from. That there's a really large misconception around what insurance is, what you're paying for, what you're getting, and why you should have it. I think that it's viewed a lot as just an expense to home ownership or renting an apartment or owning a car. And that's not really it. People will buy an extended warranty on their iPhone in case they drop it, but they don't want to buy insurance on their house in case they burn it down.
I use that exact same example for someone who doesn't want to do a home inspection.
Yeah, so it's similar. You don't want to get into something not knowing what you're getting into, right? With the home inspection, you can't see behind walls, and people can make things look really, really pretty. There's a lot of creative people out there in the world that know how to do things to hide flaws and defects, right?
Yeah.
We have whole industries built on vanity, and homes and real estate and cars and everything else it's not an exception to that rule.
Not at all.
Yeah.
So, fundamentally speaking, what is insurance?
Well, in layman's terms, an insurance is kind of like purchasing a warranty. It's a just in case policy, in case something happens to my house or apartment or belongings, someone else is going to potentially cover that expense for you.
Yep.
You pay a premium every year for your insurance, and in return for that premium, you're getting a promise from an insurance company that if you have a house fire, they're going to come in and repair your home or rebuild your home. Same with your belongings, on the assumption, of course, that there was no negligence or criminal activity involved as part of it. I mean, there's exclusions to everything, right? But at its very base, that's what it is.
Yeah, I love it. So again, the reason why I brought you on is because when someone's buying a house, I'm typically focusing on first-time home buyers with this topic, because when you buy a house for the first time, you have to get home insurance. It's a part of the conditions usually, unless you don't plan on living in it.
Yeah.
How does someone qualify for home insurance?
I mean, everybody qualifies for home insurance. There's not one house or person specifically that can't get insurance. There's two common real misconceptions, is that a house is uninsurable, which every property is insurable. It's just a matter of whether or not it fits with that specific underwriter or company.
Okay.
And two, whether or not you want to pay what it costs. I think a lot of people, I get it all the time. I'll get an email or a phone call. "Hey, Aaron, I'm looking to insure address 123 Fake Street. The house is worth about $250,000. Well, that's not how insurance works. It's not based on the value of the home. It is to an extent, but most products now are a rate by peril product, which I'll elaborate on later on. But get back to your question about how do you qualify. You simply just, call an agent, visit a brokerage, visit an agent, go online. There's so many ways to get insurance now. You fill out details on the property, you fill out some personal details, and Bob's your uncle. It gives you a rate, or it doesn't and tells you to call them.
Yeah.
Some places don't want to insure older homes. Some places don't want to insure, old oil tanks. There's a lot of variables in there, but everybody qualifies for it because it's a condition of most mortgages that you have to have insurance.
Yep.
In order to be provided the mortgage.
Okay. What's the average cost on a mortgage, on a home insurance? Sorry, not a mortgage.
That's a really, really tricky
Okay.
and subjective question.
Okay.
So there is no average cost, right?
Yep.
Insurance companies would have their average cost based on their whole book of business, but to tell you what a house in the South End would cost is almost impossible without looking at the whole profile.
Yep.
And that comes back to my rate by peril comment. Why you can't just call someone and say I want $250,000 worth of insurance. Cash policies are very rare these days. In the standard, personal market. Well, outside of that, with commercial insurance, there's a whole lot of different stuff. But with the type of insurance that everybody wants, it's a rate by peril product. So how that works is essentially there's a price tag assigned to each possible instance that could happen.
Okay.
Let's say fire. So if you've ever called around for a home insurance quote, they may ask you, what's the style of home? What's the square footage? What type of siding do you have? What type of roof do you have? Those all tie into the building materials are your risk of catastrophe due to fire or wind or hail. Those are three major perils that will then be assigned a price, right? Same goes for your roof. Then you get into additional coverages like water, sewer backup, things like that. And then what a lot of people don't realize with home insurance is a very large portion of your rate is actually based on geographically where the home is located.
Oh, okay.
So your postal code is how an insurance company would kind of drill that down.
Get the map.
To figure out what to charge in that area. And why that's important is, again, back to that rate by peril option, is maybe in one area has a higher propensity for theft.
Yep.
So you'll be charged more for the theft portion of your policy. Maybe one area has a higher water table, so you'll be charged more for your water protection
in case of floods.
Portion of the policy. So there's lots of actuarial data that goes into that. That's way beyond my scope of how they actually how they figure that out. And then one major factor is the client themselves. So much like auto insurance is based on your driving experience, home insurance is based on your
tenant experience. Because fundamentally speaking, if people usually go parents' place, rent for a year or two, 3, 4, 5, however long they rent for it, and then they get into a house. If it's based on experience, would it be off of what the tenant insurance policies were?
Yes and no. So having prior insurance certainly does help give a better rating.
Okay.
It shows a certain level of responsibility.
Yep.
So you'll get a deeper discount for having had that. It shows that, you haven't had any claims. There is a credit component in most home insurance.
Okay.
It is an optional piece for a lot of companies, but it is slowly becoming the standard. Okay. And it's eventually going to probably creep its way over into auto insurance. And the reason behind that is if you've ever called a agent or a broker and they've asked you about an insurance score, what they're referencing is basically a no-hit credit check.
Yeah.
So it has no impact whatsoever to your actual credit file or your credit bureau. It more or less, if you think about someone's previous history of paying their obligations, that there's a strong correlation to somebody who has an extremely good credit rating to somebody that's an extremely good insurable risk, and that's what gives you the best rate. Someone who has had lots of payment issues in the past may be charged more for their insurance because
of the history.
Because of the history, the insurance companies want to collect the premium faster.
Yeah.
It also goes to show your financial stability, right? So how likely are you to make a small $500 claim versus a $50,000 claim?
Yeah.
If you're somebody that is more financially secure, you're probably going to take on and self-retain a portion of that risk.
Yeah.
Be it through a higher deductible or just not contacting your insurance company in general. and paying the full expense out of pocket.
Okay.
So I think that's the biggest reason why it's almost impossible to give you an average
That's fine.
of what it costs.
I asked the question.
because of that component. And I think it's really good for people to know that, because I see it frequently where someone will say, well, the person I'm buying from already has this house insured with your company and they told me they're paying this amount.
Yes.
And
but there are extenuating circumstances in the two cases.
That's all well and great. And the house, the values, the policy, there's other things. The policy they have could be out of date. They may not have updated it. Again, going back to that insurance scoring piece, their prior insurance history, different accommodations. If you have different products insured, you get different discounts. So there's a lot going into that pricing piece.
Yeah. Okay. You brought up building materials, which is where I was going to go next, because what are some building materials or things that insurance companies don't like when they see it? Because there are a lot of older homes in Halifax, particularly on the peninsula and the surrounding boroughs. There's a lot of, we do have homes that have discrepancies in terms of a quality of roof or a old water tank, old oil tank, even asbestos products. We still see lots of those plenty of times in the older homes. So
yeah,
what are ways for people to be denied?
Again, it doesn't necessarily come down to being denied. It really depends on the company that the broker or the agent's representing.
Okay.
With my company, we're not into houses that have old cast iron plumbing or knob and tube wiring. I think that's a fairly standard piece across the industry. They're old, they're outdated technology. They typically don't suit modern household loads. Especially knob and tube or even aluminum wiring, the fire risk of that is very high.
Yep.
Cast iron plumbing, you don't see a lot of it. You do see some of it in the older areas of Halifax.
South End, West End.
Yeah, so those are your most common ones that you'd probably come across. Then, of course, there's older oil tanks are typically an issue, and that's pretty self-explanatory. An oil tank leaks, it's extremely expensive to clean up. There's a lot of environmental impact. So enforcing that, a lot of companies are 10 years. If it's an outdoor steel tank, you replace it, or, we don't insure this property for you.
Yeah, I understand.
There's reason behind it. And I hear it daily. Well, the tank looks like it's brand new.
Good little bit of spit shine on before they got ready to sell.
Right. And that may very well be the case, but studies have been shown to show that these things corrode from the inside out as the oil's corrosive. The seals start to break down, and trust me, you don't want to be caught up in the middle of a claim to clean up oil.
Yeah.
A lot of companies are covering it. Some companies do exclude it, but it's the headache of replacing the tank for the $1,500 to $1,700 that they're going for now is much better than going through
the oil,
having your whole property essentially destroyed due to oil.
Funny story, actually. I talked about my parents' place in the South End before we got on this podcast, and we had oil spilled in our backyard when I was 10, and they had to dig 50 to 100 feet.
Yeah, and then they have to bring in and filter out all the soil, and then you're left with.
It took, I think, a year and a half before we were able to go back outside, and they were like, "Oh, you're good. You can play on the grass again." Now they because it wasn't our oil, it was all covered by the insurance company of the property that did it. But I know the impact that an oil spill can have if it does happen.
It's huge, and it's damaging your property. You're buying this property for enjoyment. You should take care of it. So some common things that insurance companies are looking for outside of that knob and tube and cast iron, because it's not as abundant as it used to be. The age of oil tanks are important. The age of your roof is important. The age of your water heater is important. It's important to have the right type of siding accurately depicted on your policy, the right type of roofing material, your heat sources. Do you have a wood stove or a pellet stove?
Electric heat.
Do you have electric heats? Do you have heat pumps? Do you have any gas heat in your home? All of these, you can see how this goes back to that rate by peril piece, where a lot of it ties into fire, because fire is one of the more common losses that cause total loss.
Yep.
And water is now becoming very much prevalent. So having things like backwater valves installed, or having that septic inspection to make sure that everything is up to par and functioning how it should be, or your sewer line inspected to make sure that that's not going to fail or break, because you don't want to clean up just as much as you don't want to do oil. You certainly don't want to do a sewer line back up into your home.
I understand that.
Yeah.
We brought up knob and tube, and this is a good question for me, is because if we come into a home that has knob and tube, and let's say my clients want to renovate it, and they plan on getting the home and then fixing the electrical and updating it, can they still qualify for insurance, or would that be a hurdle because of knob and tube?
No, again, there's always a market for every property.
Okay.
There would be restrictions on what's covered and what's not. There would be increased premiums due to it, but every property has or can obtain insurance. It's just from what company, how much are you willing to pay for it, and what type of restrictions are going to be put on there.
Okay.
The knob and tube piece, it's not as common. Most times when it's there, it's not active.
Yeah.
It's not tied into anything. I think that I may have seen it one time that it was actually active, and it was a very, very old, like 1800s in the valley.
Okay.
But it's not super, super common. And I think it would take more work on a client's behalf or on a broker's behalf to find a market that's suitable for that.
Yep.
Any good agent is going to, whether it's, they want to make the sale or not, any good agent's going to advise the client what's best for them.
Yep.
So they're going to, I may come across that I know that we don't have a market or a product for knob and tube or cast iron plumbing. So I'll make a recommendation. We have partnerships externally where we can help clients place those risks, because at the end of the day, we're much like a real estate agent. We're all in the same business of, protecting our clients' interests, right? And their dollar.
Yep.
But at the same time, as a broker or an agent, we have to protect the insurance company from unfavorable risks.
Yeah.
But some companies have an appetite to take those things on, and some are designed specifically to do that. Much like with auto insurance, we have a facility association that's designed to take on those people that have had multiple claims or tickets. Every company pays into that. It's called the risk sharing pool to be able to do that.
That's amazing. As an insurance agent, so I keep hearing different people can take on different things, right? So are you almost like a mortgage broker in a sense that like you have access to all these different companies that offer all these different products, and you select the best one for your client in the situation?
I'm not. I specifically represent one company.
AllState.
So yeah. So there's a few out there like TDs, your AllStates, your RBC, cooperators. They're all direct writers, as they would be called. So when you deal with someone there, you're dealing with an agent who represents just the one company.
Okay.
Each has its advantages and disadvantages. Technically, pricing wise, you may get better pricing from a direct writer. You'll certainly have a direct line to the insurer.
Yep.
So your questions are being answered directly from the insurance company, as opposed to through the broker, who is the intermediary between you and the insurance company.
Yeah, of course.
A broker is one of those ones that's more specialized in those one-off risks, those knob and tube, those cast iron plumbing, those old homes that are going under reno.
Yeah.
Anybody looking to place commercial insurance. Not to say that they don't do personal lines just the same as a direct writer would. It's a different setup. So if you think of it in terms of a mortgage broker, that would be an insurance broker. They have access to a couple companies. And then you have a mortgage specialist with, say, Scotiabank. That would be the equivalent to an agent with Cooperators or AllState or TD or something.
Okay. All right. Investment properties. Is there a different set of criteria to get home insurance on investment properties if the person doesn't plan on living in the house?
There is. Always make sure that your tenants have tenants insurance to protect you from their liability and to protect themselves.
Yep.
The pricing would be different in terms of the qualifying criteria around the mechanics of the home itself. No, it's relatively the same. There's different stipulations. Some companies may require that they insure your primary residence in order to insure a rental property. That would be so that they can extend liability. Also, if we're going to take on the risk of a rental, they may want to have something to kind of back it up to increase the profitability, I guess, of the household.
Yeah, I understand.
The other piece around it would be, who are you renting it to? That's
Okay.
a big one. You know, are you going to do an Airbnb? Are you doing actual tenants in there signed to an annual lease? Is it student housing? These are all different variables that'll affect which market you can actually take that property to.
Okay.
But your standard stuff, you know, if you came to me, Jason, you said, I own a house here in Halifax that I rent. I live out in Sackville. I would say, are you interested in looking to insure both? We'd go through the process of looking at both. If the price works and the coverage works, that's a pretty standard way to do it, as long as you're not Airbnb-ing or student housing.
Yeah, okay. That leads me to my next question then. I know banks don't like giving loans or mortgages on Airbnbs. Like, typically when someone goes to get financing for an Airbnb, you're not going to make it known to the bank that you're going to Airbnb it. So when someone for Airbnb for insurance purposes, do you guys insure Airbnbs? Is that more of a policy that you guys don't even consider?
With AllState directly, currently we do not.
Okay.
Not in Nova Scotia anyway. We do in other provinces. The issue around Airbnb is the constant coming and going of people, right?
Yeah.
So a long-term tenant will take better care of your property than a short-term tenant.
Yep.
Right. There's still, even though they don't own it, there's typically a pride of ownership factor in there. And I think that's where the banks are more concerned with the fact that, how are you paying the mortgage if you're not collecting a fixed rent? There's no paper trail. There's no financials that say you're going to have the same check every month.
Yeah.
And the same basic premise kind of applies in insurance. We don't know who's in the property, right? Do you have an elderly lady who lives by herself? Tomorrow, do you have 12 students that go to Dalhousie and want to have a COVID party? We don't know. So
great reference.
Right? These are things that you need to consider when you're buying an income property.
Yeah.
I think they're a great investment. I think that insuring them isn't difficult. You just want to make sure you're doing it to the right person. You know, a lot of people will buy an income property because they want to make the most amount of money they can.
Yep.
As fast as they can. I think a better strategy is to think long term. And that's kind of where insurance companies think is the long term. We're not thinking, well, what's going to happen tomorrow? We're thinking, well, if that roof is 15 years old,
Yes.
right? What is the possibility that the roof could leak
Tomorrow
versus 5 years from now? And that's why there's different regulations and guidelines around changing things out like that on your home and who you allow to rent your home to. And even home-based businesses are very similar to having an income property. You know, do you run a daycare? Do you run a jewelry studio? Do you run a hair salon out of your home? These are all factors that a lot of people don't consider, but you're exposing the insurance company and, more importantly, yourself to an increased liability of, you know, a potential lawsuit of somebody being injured in your home.
Yes. Okay. That's a great question, actually, because I had a friend call me yesterday about buying a home, but that he could do haircutting out of. So let's say him and I go and find a house for him to be able to run a barbershop out of it. Would he need a different kind of insurance than a regular home insurance package to cover that?
Yes, he would. So a standard home insurance package could potentially still cover the home.
Okay.
He may need to purchase additional endorsements for the home-based business. He'll need to seek out a company that likes that type of business, right?
Yeah.
That's well versed in it. You know, it's kind of like the easiest way that I like to explain is you have different mechanics throughout the city. Some are really good at working on BMWs. Some are really good at working on a Honda Civic, right? And same premise applies for insurance. You have insurers out there that are really good and well versed at insuring barbershops that are based out of someone's home. You also have other insurers that are really good at insuring daycares that are based out of someone's home. So insurance really isn't a one company fits all kind of thing. You do have to do some research if you're going that direct writer route, or have a very well versed broker. If you're going to go through the broker that knows exactly what you need and is asking the right questions, because especially with hair salon, barbershop in the home, you can think about the liability that comes around the health risks associated with that.
Yes.
Not including COVID times, but just standard times. There's maybe you cut somebody accidentally, there's increased chance of Hep C. There's a lot of things that I think people don't think about. They think about, well, insurance is just an expense. What is it actually covering?
Yes.
Well, it's protecting your financial interests is what it's really doing. It's making sure that you don't lose everything by not thinking ahead. Is how I'll phrase that.
Yeah, because shit happens.
Yeah. Yeah, it does. It really does. And, a lot of people will say, well, $500 a year to insure my barbershop, that's crazy. All I do is cut people's hair. But it only takes one person to say you used a dirty clipper and, gave them Hep C or some kind of fungal skin condition. And then you end up with a lawsuit on your hand because of that. And, you would hope that everyone is following the regulations set out by their industry, but that's not the real world all the time.
No, we're not going to, obviously don't say, but it is a thing.
Yeah.
Like some people skirt the line, some people don't.
Exactly.
Great. It's like any industry. If you're great, you're good, and you're not so great.
Yeah.
Yeah. Okay. Moving on then, when it comes to finding a right insurance agent, so you talk about different brokers or the direct writers. Is there any difference that people should go to? I know you're a direct writer, so maybe a little favoritism there, but I mean, just in the sense of are there questions people can ask about finding a right insurance package for them?
I think that if you'll know when you're dealing with a good agent based on how well they know their product.
Okay.
Any question that you ask, one, I've always been the person, if I don't know, I'll tell you. I'll say, you know what, I don't know, I'll find out, I'll call you back in an hour.
Yep.
Because it becomes a learning opportunity for both of us. In your standard home insurance, it really comes down to the rapport you build between yourself and the agent or broker. I think a lot of the products are so similar, and what you're looking for the most part. You want to be covered if your house burns down.
Yep.
You want to be covered if you have, the sewer back up. You want to be covered if a pipe bursts in your wall. Those things are fairly standard nowadays.
Yeah.
You just it comes down to personalities, I think. I think that's a big part of it. The service. I think service is the most important part. A lot of people these days are apt to shop on price, and that's really not the best way to buy insurance. It's why we're still a business where the online hasn't taken off like retail has.
Yeah.
Some might think, well, I'd rather buy online. Okay, that's all fair. I understand that it's convenient. But when you have a claim, who do you speak to?
Yes.
Who gives you your advice? Who's advising you who you should call next, right? And I think I personally have always been the type that if I can have a personal relationship, especially with the person who is protecting my largest purchase I'll ever make, that's very important as opposed to maybe a call center or a bot online.
Yes, I understand that completely. I'm going to go back to single family homes because you brought up something that I think a lot of people may have questions for, in a sense of, I know for a fact as a realtor that when we go to conditions, selected offer, we have conditions, I'll send them to you to start the insurance package. And they'll get, like you say, you'll give them a list of criteria asking for specifics. So like type of siding, type of oil tank, is it fiberglass or is it, the other kind, all these things. How do buyers fill out that package?
I usually will recommend, a lot of the information is found on your listing cut, right?
Okay.
So a lot of it is your age of the home, how many bathrooms. You can tell the type of siding by looking at it.
Yep.
The square footage is on there. Pay attention to things when you're viewing the home, like how far are you from a fire hydrant? You don't need to know the exact amount. You can kind of eyeball it. Is it within 200 meters, 300 meters, 1,000 meters, what have you? Pay attention. Google Maps is really useful. Where's the nearest fire station? Those things are important. Pay attention to the heating type on your first viewing because, things like oil heat and wood heat will cost you an additional premium versus pure electric heat.
Yep.
The rest of the stuff, home inspectors are really, really useful tools for yourself as an agent, for the client as a buyer, because it gives them some insight to the mechanics of the home. I always say, when you're doing your home inspection, be there. Don't have your agent do it for you. Don't be staring at your phone. Be present.
Yeah.
Walk around. Every home inspector that I've met or that I've worked with personally, they're very knowledgeable people, and they've taught me a lot about the mechanics of a home. So walk through it with them, and they're gonna say, "This is aluminum wiring."
Yeah.
Your insurance company may want to know about that, right?
Yeah.
And that's a standardized question. So I have a list of standard questions, and I will typically give that to my prospective client prior to their home inspection. We'll have the conversation. Usually they want to know price, but again, it's not that simple. We need to know more about the home and about yourself. So I say, take this with you.
Yeah.
These are the important pieces from an insurance perspective, which are typically the most important pieces from owning a home, right? You want to know how old your roof is. You want to know how old the oil tank is, because that allows you to plan for replacement of those things. These things don't last forever, regardless of what the roofer tells you, lifetime warranty on the shingles. They don't. They just don't, right? And I think that's a valuable tool. And the best advice I can give anyone, if you're going to call an insurance company to save yourself the frustration and the waste of time, do it after your home inspection, or do it by calling and saying, "Hey, I've heard you guys are really good with your clients. My uncle referred me to you. Do you have a list of information that you require to insure a home?" And most agents will say, "We certainly do," and send it to you via email or tell it to you over the phone. And you take that with you on your inspection. You're going to come out with a lot more knowledge on what the home is, and what the home could potentially cost you in 5, 10, 15 years down the road for maintenance costs. But you're more well equipped to help your agent insure the home. There are instances where companies will still inspect a home.
Yes, of course.
But most often, your standard insurance, if it's relatively standard value and you're not insuring something that's outside of the scope, it's pretty much what you say is what we put down. So you want to make sure that what you're saying is accurate, so that you don't end up putting yourself in an insurability issue or an issue with claims because you misstated something.
Yes.
Because just because you got it wrong doesn't mean that it's the insurance company's fault.
No,
right?
of course.
If we were clear and asked the correct questions, all of these things are documented on your policy. So if you tell me, "Yeah, my roof is 5 years old," but good and well it's 25 years old, that's called misrepresentation. You don't want to do that either, right?
No, of course. I will beat this drum again. I've beat it on other episodes before, but if you are spending $250,000 on a house, please be at the inspection. Please. It's a fancy $250,000 box. Please. I'm going to beat that drum till I die.
I mean, it's an afternoon off work, right? So
exactly.
If you have the ability to do so, you should. And it's important. If you're going to be a homeowner, and I haven't been a homeowner for forever, but you want to know how your house works. And that's like your dad teaching you something, or your uncle or your mom teaching you about how to fix a light socket or whatever, These are life skills that every homeowner should know about, and just knowing where things are located is important. Because I've had to call a plumber on an emergency for clients, and they're like, "Where is this in my house?"
Oh, dear.
Well, typically, because I've attended inspections and looked at homes, I can say, well, typically it's probably located here. Those things can save you a lot of money, especially in those emergency calls, because time is literally money.
Yeah, especially if you have a leaky faucet that's actually guzzling out. You can only imagine the insurance claim that would be if the entire floor gets flooded, which my mom did once. Shout out, Mom. Now, there's a little tidbit you said before that I really want to dig into. The location of the fire department.
Yeah.
I'm going to bring in location now, because if you're living out in, further out, let's say the real urban, not the urban communities, but the rural markets, and your fire district is not exactly down the road, will that impact your insurance policy just because it might take the fire brigade or the police longer to get there? It will.
So insurance is all about assessing the risk of what could happen.
Yeah.
Right? Not necessarily things that will happen, but what could happen that they would have to, have a payment for.
Yeah.
So logically, if you take time to actually sit back and think about how that works, well, the further away from a fire station you are, the more chance of a catastrophic loss you have.
Yeah.
So you will pay a higher premium for that because the insurance company knows that there's a higher chance they're going to have to pay out more to repair your home or potentially replace your entire home.
Yes.
Fire departments have great response times,
Of course.
but they can't beat distance, right? You can't travel 13 kilometers in 30 seconds. It's just not possible. So you do pay for that increased risk.
Yep.
It's not your fault.
No.
It's no one's fault, but that's just the nature of how it works. You know, you're protecting against those things that could happen. And in order for insurance companies to be able to cover you, they do have to collect a premium. And when you really think about it, let's say you're paying $1,500 a year for your home insurance, but your home is worth $300,000. That $1,500 that you might be upset about it 10 years from now when you've never made a claim because you paid $15,000.
Yep.
But in that 11th year, let's say you have a claim, that $15,000 was worth every penny if you have a large fire.
Have to be. Absolutely. But that's also the nature of insurance is to, I understand the protection that the agencies have to provide because their job is to provide money and safety and peace of mind to people that
insurance
at an awful moment.
is risk. It's a risk pooling, risk sharing,
Yes.
measure, right? And I think that's what a lot of people, there's this misconception of, you know, I didn't make any claims. Why is my rate going up? Or my vehicle's another year older and I'm not driving. Why is my rate going up? Well, because there's still people out there making claims. There's still people out there driving. There's still more houses going up. There's still new businesses opening. Everyone's paying for everyone's claims.
Yes.
You can rest assured that those people that have the claims are certainly paying a
More.
larger portion for that than you may be. But at the end of the day, that's how insurance works. Is
Yep.
it's exactly what I said there. It's risk sharing.
Yes.
We're all paying into it so that none of us have to pay for the entirety of our loss.
Yeah, of course. Going for I like to stick on houses, of course, the Halifax real estate podcast and all. Let's say I have a client who is buying an absolute decrepit home. There's nothing good about it. They want to renovate
Bulldoze it. I'm kidding.
I mean, that is an option. We can look at the cost of bringing in the bulldozer, but they want to renovate. They want to buy it cheap, renovate it, bring it up to a nice livable standard, and live in it. Not sell it, not flip it, not rent it out, but actually live in it. Will they be able to get home insurance on the home in that state?
Yes.
Okay.
Again, it comes back to that market piece and which insurance company they want to go with. There's different products. So you have your standard homeowner product. You have a builder's risk product, which depending on the extent of the renovation, it could fall into that. You do have policies that have provisions that say you can reno a certain percentage of the home at one certain time and still be covered.
Okay.
So those are things that if you plan on doing a renovation, talk to your agent and say, look, I'm going to eventually gut this home. How can I protect myself from an insurability standpoint to make sure that I'm covered while I'm doing this? And you know, you can go to the policy wordings and see, okay, well, you're doing more than 20% of the home at once, so that technically voids your policy. So maybe do a bathroom at a time, then do your kitchen cabinets and do it kind of in phases instead of a complete gut job. If you're going to live through it, if you have the money and you want to have it done quickly, then there's a different product out there for you to be able to completely gut the house and rebuild it.
Good, you got to my next question.
Yeah.
The gut job, because I mean there are people that have that financial stability able to do that, and that was a question I was getting. My next question, you just took it from me.
So we see a fair amount of that in Halifax on the peninsula. We have a lot of aging homes.
Yes.
And people are buying them and doing exactly that. And insurance companies don't love the process of the renovation. Again, it comes back to speaking to that liability piece of injury and fire and all that. But we love brand new homes, right? Because the risk on them is relatively lower. You know that it's all brought up to current code. It's all been re-inspected. The biggest piece of advice that I can give you if you're doing a reno or a full gut job is hire a qualified professional. don't do your own electrical work if you're not an electrician,
Please.
right? You may be handy. I'm pretty handy. I can change a light bulb, right? But I'm not going to go. I could probably change the seal on my own toilet. Those are fairly basic things, but there's a lot of engineering behind electrical loads and which way plumbing should flow.
Yep.
And, HVAC, that kind of stuff. I think that some homeowners who are relatively handy think, well, I can do a lot of this myself between me and my Uncle Bill and my dad. But you still need it to be up to code.
And a weekend of beer.
Yeah, right? And you still are going to want to pull the proper permits so that it's done correctly and inspected by the city. Those things don't typically affect insurance, but it is a question that's asked was it self-renovated or done by professional? And that can change the type of product you're eligible for or your insurability with that company altogether.
Okay. And when it's done by professional, obviously the professional needs to get permits. If you're doing it by yourself, keeping the permits to show that you've done the work, as you say, would that help with you with insurance or?
Well,
no?
It depends. It really depends on the property. If you're going into something that's really, really old and you're wanting to show that it's been updated, the more documentation you have to show your upgrades,
yes,
the better.
Okay.
Because then it can start to change things like the effective age of the property. It can change some of those ratings by peril for your fire based on how up to date your electrical is.
Yes,
right?
of
So
course.
Having that documentation is always good. Always hold on to that. If you ever do anything to your home, keep it. Not just for insurance purposes, but in the real estate market when you go to resell it, to prove that you've done upgrades or what have you, and to show the age and who did it and how well it was done. That adds value to your home alongside of
course it does.
Helping you with insurance.
Full disclosure adds all the value in the world.
Yeah.
I guess my next question is that when we're buying a house as a realtor, this is for realtors and buyers as well. This is a great question, I think, is that when I get the accepted offer for a client, I then call you. Now, you've talked throughout this entire podcast about conversations up front with your insurance agent and or broker to get the best term or best policy available. So how quickly should someone approach you about buying a house then? Should it be when they first start or should it be when they get the accepted offer?
Well, you don't want to go around talking to insurance companies on a house that doesn't exist yet.
Of course.
Right? So I think that after the accepted offer is a good starting point.
Okay.
If you're buying new construction, that's a fairly easy conversation to have. You don't necessarily need to wait until that home inspection because everything's brand new. You can speak to the age of the roof. You can speak to the age of the electrical and the plumbing and, the year it was built, those types of things. You have access to your square footage because you've looked at the plan, you've looked at the cut sheet. It's usually those older houses when you get into stuff that's over 15 years old where there's likely been updates and upgrades.
I love that you call an older house 15 years old.
Sorry, older than 50. Well, most people aren't replacing their roof at 15 years old, that kind of stuff. So not necessarily that it's an old house. I mean, old in the aspect that you would have or someone potentially has changed something from its original build, right?
Yeah.
Be it the water heater or the roof shingles or the oil tank. Those things come up more frequently than you might think, right? Every 10 years for an outdoor steel oil tank, every 20 years or so for a roof. It's recommended every 10 years for your water heater.
Yep. Because they expire after 10.
Well, they rust, and the last thing you want to do is come home after you've been out at work all day and your water tank let go because that water doesn't shut itself off automatically. So those are the types of things when you get over that 15 year is where you really want to pay most attention on that home inspection. But I would say typically it's right around maybe the day before in around that home inspection day if you don't already know all the answers, right? And I think that there's a lot of great agents in Halifax and a lot of them know what they're looking for when it comes to those conditions, right? You have you all your deals, you work the same things. You have financing, you have inspections, you have insurance.
Yep.
So you know what you need to do for financing, you know how to get them started on that, you know what you need to do for inspections. And typically, if you've been around the block a few times, you know what an insurance company is going to ask with respects to insurance. So you can, while you're there, at the home, say to your client, they're going to want to know the age of this oil tank. So if you like this house, let's write it down now.
Yeah.
They're going to want to know potentially the age of this water heater. So if we can see it, let's write it down now.
Okay.
Those types of things.
My next question, we're gonna change it. Condos.
Yeah.
You brought up age of home as 15 being old. So it made me think of the older condo buildings in Halifax. Is there a difference to getting a condo insured, particularly with an older building?
A condo is a whole different kettle of fish.
Oh, I love it. Okay.
A condo, you'll have strata or you'll have freehold, right?
Yep.
So one, you own the exterior, I guess, the little plot of land and typically that's for like a townhouse, right?
Yep.
And then the other, you own essentially none of the building,
But the air,
right? That's the easiest way to kind of describe it. So with one, and sorry, I always get the two mixed up unless I'm sitting right in front of it. But the strata is when you need to insure the building.
Okay.
Right. So you would have a different endorsement on your policy. That's more when age will play a larger factor. Typically with condos and tenant policies, and the age of the building isn't as much of a concern because we're not really insuring the building.
No.
It will affect your rating.
Yep.
But it won't necessarily affect the acceptability.
Okay.
So with a condo, it's more the things that you want to pay attention to as a buyer are the financial stability of the condo corp. That's a big one. Your insurance, what I think a lot of people think condo insurance is I'm covering my contents and everything inside the paint. I hear that all the time. That's not quite it. The policies, if it's a good policy, will include things like a loss assessment coverage. So if you are hit with a loss assessment due to a high deductible, has to be due to an insurable loss, not due to an upgrade. But if you're hit with it because of a high deductible, you can actually claim that against your condo policy. So if your condo corp comes to you and says, hey, we need $10,000 from every unit owner
For the special assessment.
for this special assessment because we have to replace the roof due to the hurricane that just blew by. We have a $100,000 deductible, 10 units. You can do the math there.
Yep.
You can claim that against your condo policy if you have that provision.
Oh, amazing.
So there's loss assessment coverage. There's unit contingency coverages, which is very similar to cover your unit, right? You want to make sure that you're covering additions and alterations. Your basic condo policy is covering you for what the condo was when it was built.
Okay.
Right? Now, we understand that there's going to be changes in building materials. So there's some discretion used there. But if there's, if it's not standard that every unit has marble countertops and a golden faucet, literally 24 karat gold, you'd want to reflect that on your policy in an additions and alterations coverage.
Yeah.
And it's just more or less looking at, well, this has a really nice kitchen. It's not your standard builder's grade kitchen. It's all custom cabinetry. It's worth about $25,000. You should let your agent know about that. And your agent should be asking you, has there been any additions or alterations to
the
unit? Have you added an extra bathroom with approval from the condo corp? Things like that happen, and all of that becomes your responsibility.
Of course. When it comes, you spoke on the special assessment. As when you guys are doing an insurance policy out for a condominium, do you guys ask and get the access to the special assessment?
No.
Okay.
No. Because it's a hard limit on our end.
Okay.
So, for myself with AllState, we have $50,000, $100,000, $150,000 worth of coverage that you can purchase.
Oh, okay.
So it's different tiering there. So we're not concerned with that part, but the cautionary piece, as you would recommend to your client if it wasn't a strong condo corp, which I don't think we really have many issues with that in Halifax.
No.
You might say, yeah, it's a really nice unit, it has really low condo fees, but the condo corporation has no money in its reserve.
Yes.
That's a red flag, right? Because that cost gets passed on to the owners.
Yes, it does.
A condo is basically the same premise as insurance, right? Everyone's paying for something for everyone's benefit. So no, we don't look at the financials of the building. Now, be different, I guess, on the commercial side if you were buying the building.
Yeah, that makes it. Yeah.
Right?
Yeah. I'm not going to get into commercial.
No. That's not my area of expertise anyway. So we could have a lot of dead air if you want to get into that. Yeah.
Aaron, man, I really appreciate you coming on. Thanks so much for being here.
Thanks for having me.
All right, man. We'll take care.
You too.
Thank you so much for tuning into the show. If you want to get in touch with Aaron, you can reach him at 902-266-6606 or aaron.macdonald@allstate.ca. If you want to get in touch with me, you can reach me at 902-220-7357 or jason.paul@kw.com. Thanks again. Bye.